All right, let's get right into it. Today, we're going to challenge pretty much everything you've ever been told about money. We're going to look at why that old advice, work hard, save money, might just be the worst financial plan you could have right now, and explore a much different path to building real wealth. So let's kick things off with a real mind bender, your home. Everyone sighs at your biggest investment, right? The cornerstone of the dream. But what if it's actually your biggest liability? Yeah, that house you live in. We're about to question if it's really building your wealth. And honestly, getting this one idea is crucial to understanding the real difference between just saving your money and truly investing it. For our parents, maybe our grandparents, the plan was so simple, wasn't it? Get a good job, work hard, save your money. That was the ticket. But here's the thing, that safe path, it's not so safe anymore. In fact, for a lot of us, it's become a real trap, a real dilemma. And it all starts with this idea, something that's been drilled into our heads since we were kids. A penny saved is a penny earned. It sounds pretty smart, right? It feels responsible. But here's the question that changes everything. What can that same penny actually buy tomorrow? See, this is the catch. The number in your bank account might stay the same, but its power, what it can actually get you, well, that's shrinking every single day. You're not just failing to get ahead, you're actively losing ground. And this isn't just a theory. I mean, just look at the hard math. Inflation is chugging along at, say, 3.6% a year, eating away at your cash. And what is your savings account giving you back? If you're lucky, less than 1%. That gap? That gap right there is how much value you are losing every year. You're literally getting poorer just by trying to be safe. And hey, don't just take my word for it. This is coming straight from the American Bankers Association. They're basically saying, yeah, it's a tough time to be a saver, and it's not some temporary thing. So trying to build wealth by just saving, it's like trying to paddle a canoe up a waterfall. It's just not going to work. Okay, so if stashing cash in a savings account is a losing bet, what's plan B? Well, the standard playbook tells you to invest. And the first thing they always say is, you got to diversify. Put your money in a nice, safe portfolio of mutual funds. Don't put all your eggs in one basket. But what if that's also terrible advice? The sources we're digging into today argue that those so-called safe mutual funds are actually one of the riskiest places you can put your money. Why? Because you have zero control. You're just handing your cash over and hoping the market goes up. It's a total gamble on forces you can't possibly predict. All right, so saving is failing and safe investing is actually risky. So what's left? Well, to get to the solution, we have to completely change the way we even think about wealth. And it starts with this. It is not about your net worth. It all starts with a super simple, powerful definition. An asset is anything that puts money in your pocket, period. That's it. It's not complicated. It's just about which way the cash is flowing. And a liability, you guessed it, it's anything that takes money out of your pocket. Now, let's go back to that house again. With the mortgage, the taxes, the insurance, the repairs, which direction is the money flowing every month? Is it putting cash in your pocket or taking it out? Now, once you get those two simple definitions, everything starts to click. It's all about following the money. The real difference between the rich and everyone else isn't about how big their paycheck is. It's about the pattern of their cash flow. For most people, the pattern looks like this. You go to your job, you get your income, and then, whoosh, it flows right back out the door to pay for expenses and liabilities. The mortgage, the car payment, the credit cards, it's a treadmill. You're working for money just to pay for things. But check this out. This is the other way, the pattern of the wealthy. Their income doesn't come from a job. It flows from their assets. The assets are doing the work. They generate the income that then pays for all the expenses. It's a completely different game. So that is the entire secret right there. The whole game changes. The goal isn't to get a bigger salary so you can afford more liabilities. The goal is to use your income to buy more assets. Assets that generate even more income. You just focus on building that asset column, day in and day out. And this leads us to the solution, the investor's path. And listen, this is a different kind of investing. We're not talking about buying a stock and just praying it goes up. We're talking about investing specifically for cash flow. Let's really spell this out. On one side, you have investing for capital gains. That's the classic buy low, sell high strategy. You buy something, cross your fingers, and hope it's worth more later. A lot of people would call that just straight up speculation. On the other side, you have investing for cash flow. This is totally different. You're buying an asset because of the consistent income it produces. So what are these cash flow assets? We're talking about things like rental properties that bring in more than they cost each month, stocks that actually pay you a regular dividend check, bonds that pay interest, businesses that can run without you, even royalties from a book or a patent you created. Let's make this super practical with a real estate example. Step 1, you buy a rental property. And let's say your all-in monthly cost is $1,500. Step 2, you rent it out for $2,000 a month. And boom, right there, you are already generating positive cash flow. And the result? $500 of positive cash flow hitting your bank account every single month. And here's the key. It doesn't matter if the housing market dips and the property's paper value goes down. Who cares? You're not selling it. You're in it for that $500 monthly paycheck. This quote just hits the nail on the head. A high net worth on paper, it doesn't pay your bills. You can't go to the grocery store and pay with your net worth. But cash flow? Cash flow is real. It's the money that buys your freedom. And that is the ultimate goal. So when you boil it all down, we've laid out two fundamentally different approaches to your financial life. One is the path of the saver, and the other, the path of the investor. You have a choice to make. On the saver's path, you work for money, you pay your bills, and you put what's left in an account that's losing value to inflation, and you just hope for the best. On the investor's path, you acquire assets that work for you, generating income streams that build your wealth, whether you go to a job every day or not. And that brings us to the final critical question. The single most powerful asset we all have is our mind. You can spend your life trading your time for a paycheck, or you can invest your time first in your own financial education, learning how to build an asset column that will pay you for the rest of your life. The choice? Well, that's up to you.